Welcome back to my channel. I hope you guys are gaining amazing value for your time. Today's topic is the real meaning of inducement using ICT and SMC, and I want to explain to you how you can actually notice or predict an inducement just to make you aware of it. And a big shout out to my coach. I always give a shout out to him on my videos because he did a good work on me, and I'm always appreciating him for that. Now, an inducement indirectly means a fake out. People call it like a fake out, some people call it liquidity. It depends on how you want to understand it in your own format. But you have to first understand structure, which I drew here. And I was trying to give an example for a bullish move and for a bearish momentum. Now, if I use my Fibonacci, this from the low to the high, right? An inducement always happen scenarios like this whereby a candlestick will come closer, but it won't get close to 50%. Normally, we are told that what? What are we told? We are told that above 50% for a sell momentum is our premium, right? And below 50% for our buy momentum is our discount for a buy. But now, some scenarios whereby price will just do this, come like this, do this, and it just take you out, and you'll be wondering, but I'm right, I predicted a buy, what's happening? And this will want to make you to change your bias all of a sudden. You're not wrong. The situation happened here is that price reacted above 50% for a buy scenario at a premium, while for a sell scenario price reacted at the discount instead of the premium for a buy momentum at the discount actually. Now, normally, when you take your Fibonacci from the low to the high, our Fibonacci is here to help us to buy price low, and we buy price high based on the direction of our Fibonacci. We sell high, we buy low. Now, if I mark my Fibonacci from this low to this high, the next national reference point I should be targeting at 50% is my order block or fair value gap based on this structure, right? It might be a breaker block, it might be a mitigation block, it might be a rejection block, it might be a liquidity void. But all you're targeting for at 50% is what is below 50% for institutional reference points. For a sell scenario, you're looking for anything above 50%, fair value gap, the same thing, mitigation block, breaker block, but almost aligned above 50%. This is just a good diagram for it. But anything being created below above here based on the buy scenario, it's all inducement. Price want to do what they call a fake out, take you in, you put in your money here, price just come down and take you out. Now, I try to find a very good example here. I hope you guys know how to mark your structure. You can see a structure here with your own eyes. Price did this, da da da, shift the market structure. Can you see this? It was a structure, right? You can see it yourself, right? I just drew the structure for you to see it yourself. I just drew it now. Now, what do I have? I have a break of structure here, right? A change of character or a change of character, MSS. And I'm looking for my institutional reference points to mark. I'll take my Fibonacci from this high to this low. What do I see? I'm only looking for what? International reference point above 50% for a bearish momentum or for a sell momentum. They are both the same word. What do I have here? I have my fair value gap. And what do I have above here again? I have my order block. You keep looking, asking yourself one question: is there a breaker block? No. Is there a mitigation block above 50%? No. Is there a rejection block? I can do this as a rejection block, but price didn't actually get there. But the answer is yes, there's a rejection block. This week here, if I mark it's a whole block on its own. Is there liquidity void? No. But I have marked all I can see. And what do I wait for? I wait for price to get into snare reference point using our conservative way of entry. You can put this other block around up here and do this below, and you target the next drawn liquidity below. Now, this is for a sell scenario. Let me try and find for a buy scenario. If I can find one for a buy, I'm coming. I'm trying to find a buy setup. If I can find one for a buy setup. Okay, no, that's liquidity induced. If you go around your chart, I just showed you an example for a sell, right? And what do I see here? This is for a buy inducement. There's a shift in market structure around here, right? for a 1 hour time frame, or you can take this internal one as also a shift in market structure. Let me mark it because there are two structures created in a one format way. And what do I have again? My Fibonacci from this low to this high, right? Price tapped here, but what happened? This scenario was induced. You can see it, right? Liquidity. It was induced and price came to what? You ask the same question. Is there another block? Of course, another block. Is there a rejection block? Here's the rejection block. Is there a breaker block below 50%? You can see it. Yes, there's a breaker block. Ask all the reasonable questions and keep marking, and you find that price reacted at the breaker block and went up. All you have to ask yourself is, when you use a Fibonacci, that's the bit about ICT. It's so easy if you understand all the rules and regulation. You mark your Fibonacci, you mark your structure, and the next thing you should be looking for is the next institutional reference point. Is price coming from internal range liquidity? Is price targeting external range liquidity? Is price coming from external range liquidity and is price going for internal range liquidity? That will kind of make it very easy. Those are the three things you should be looking at: your Fibonacci, your structure, and knowing where price is coming from and where price is going to. And I hope this video is very impactful and I hope it's helpful to you. If you have any question, you can ask me in the comment section, send me an email or anything, and I will try my possible best to reply as much as I can. Okay, thank you so much for watching, and don't forget to subscribe on my channel. Thank you again. Bye.